Hello, hello, everyone. Brandon William Jones, founder and CEO of Gravy. I'm really excited to welcome Norman Yu to our Lumina series platform. Norman is the director of government contracting for IMB Partners, which has been an anchor sponsor for the work we're doing to bring in the next generation of entrepreneurs through acquisition. As you can tell by the title, Norman is an expert in the space we'll be diving into. This is really going to be a deep dive into the playbook of government contracting. This talk is called Navigating the Government Contracting Landscape. And Norman was the man. This was the guy who they said we need to be speaking with. So with that, welcome, Norman. Appreciate you taking the time out of your day to drop some of the knowledge that hard learned and hard won.
Thank you, Brandon, and great to have everyone online here, and great to meet everyone, and look forward to the discussion.
All right. So, the title is self-explanatory, but before we kind of get into that, obviously some people would call this a niche, like, within the industry. It's a large niche, but it is a very specialized set of knowledge of the players, the dynamics, et cetera, et cetera. Tell us a little bit about your background and how ultimately you kind of made your way into this space. What drove that? What got you excited about the space? And ultimately, how did you get here? What was your path to get here?
Yeah, sure. My background originally from the Midwest, born and raised in Michigan. Started my career in New York City, doing investment banking at Morgan Stanley, doing consumer retail. And usually what happens is you kind of do your 2 years as an analyst, and you kind of pivot to what they call the buy side, either going to the public markets or going to private equity. I decided to go towards the private equity route, went to a firm that I hadn't heard about before, but a lot of my senior team members said great things about them. And it was a firm called Veritas Capital. They're a private equity firm based out of New York that specializes in government contracting. So both some product businesses as well as kind of traditional IT services to the federal government, or kind of government as a customer as a whole. And so joined them, and it was a complete 180 to kind of what I was doing in consumer retail, right? Dealing with the Walmarts or Targets of the world. And now you're pivoting to a whole new world, right? Government contracting it's more of a B2B business, right? You're not selling to an end consumer. You're selling to federal agencies or state and local governments. And so it was a refresh on what drives that market, but found it to be fascinating, really unique. And to your point, Brandon, it's a large market, right? The United States government is the largest purchaser of goods and services in the world, spending $6 to $7 trillion every year. And so did that, and starting in 2013, I then spent a number of years in the hedge fund world, tried the public markets for a number of years, and then decided to come back into private equity in 2018, and had the opportunity to join IMB Partners in 2022 as both a director and lead of the government services vertical. So that's kind of my quick background.
Excellent. And I want to ask you just a quick follow-up question, because I think the hedge fund and then back into PE, move is interesting. What did you learn in the hedge funds industry that you can apply to the space you're in now? Or what did you like about the space over kind of the hedge fund industry?
Yeah, I think what the hedge fund industry, how it differentiates, right? So you're going to have less information than in private equity, where you have kind of perfect information on the companies that you're making investments into. The hedge fund world, the information is all public, right? So you're from hedge funds to a Main Street investor, you have the same information from public filings to anything out there. And so I think the challenge for me was how do you kind of differentiate yourself among your peers, right? It's at that extra research. You got to go a little bit deeper. You got to go, when I was on the hedge fund side, you had to talk to experts on the outside, talk to former executives. So there's a lot more, I would say, running around, scrappiness to it, trying to get a little bit of incremental information, versus on the private equity side, you are a little bit more, because you're dealing with management teams that you already have great relationships with. You might own the company already. And so you have all of that information at your fingertips. You have the financial data, the operational data, which you don't have, say, on the hedge fund world. And I would say that, key learnings there is you got to just, I mentioned earlier, is kind of, you have to move your feet, right? But any piece of information will dictate how stocks perform, and the underlying valuations of these companies can alter pretty quickly. We've seen that with AI, for instance, in the public markets. We've seen that even with potentially the new administration impacting government services and government products on the defense side. So every new piece of information makes its way faster and is reflected in the valuations quicker in the public markets. But I think on the I moved back to private equity was I really appreciated more the value creation playbook, working with management teams and be able to grow a platform, right? And invest in a business and then start to augment it through both organic investments as well as inorganic, and which is predominantly through M&A, looking for new capabilities, new past qualifications, et cetera, especially in the government services vertical. So, but I'll pause there, Brandon, and see if
No, no, that's it's interesting. I think not too many people have that perspective. And that's actually a good segue into the next question, which is, what is your scope at IMB? Director of Government Contracting, leading that vertical. Give us a little bit of reference around the platform itself and where you fit into that platform and what the scope is within your role at IMB.
absolutely. IMB, lower middle market private equity firm based out of Bethesda. And we were founded by a gentleman named Taurus Richardson, and who had historically, probably for the last 10 plus years, we've been mostly a kind of, I'll call it independent sponsor. And we had kind of two verticals that we specialized in: utility services and government services. And probably call it 2-ish years ago, I think the firm decided we wanted to become more of an institutional, traditional fund business. And so we raised our inaugural fund, which was a SBIC fund, which we can talk a little bit later how it impacts government services. But we raised about $125 million to go after these two sectors. Our kind of core sweet spot is, call it 3 to 10 million of EBITDA businesses as platforms, with the opportunity to do add-on acquisitions and kind of build an overall platform. And hold period is called 3 to 7 years. So we've kind of gone from the independent model to more of a traditional fund model and cadence of investments and exits. But again, our core sectors are utilities and government services. We think kind of the barriers to entry, kind of the deep industry expertise, not only lend you to becoming a better kind of investor just because you've seen it over and over and over, but you become kind of a preferred buyer and preferred partner for folks who are in these industries, right? Versus being kind of a generalist fund.
Got it. And then what is your kind of role? Because again, my perception of IMB Partners is a lot of the work that's happening is in touching your lane. So when you think about you leading that vertical, where do you start? Where do others end kind of within the firm as far as what their mandates are?
Sure, sure. So, for us, especially specifically in government services, I will break it down. Like, government is the federal government such a big entity. There are multiple facets of it. There's kind of the product side of things, all the way from buying kind of staples like pens, pencils, all the way up to buying multi-$100 million aircraft for the military. That's on the product side. We don't do the product side in government services or government contracting. We focus predominantly on the services side. So that could go from, as I'm in our portfolio, we had kind of food services, we have IT services, different type of products that and services that we supply that aren't kind of your traditional off the shelf or high end products. And then within that, we're looking for contractors, and how it works is what I focus in on is identifying areas of interest within these services and then starting to build relationships with the potential companies that are already in the space, right? Who have won contracts, who have really good capabilities, who have really good past performance, and who are looking for that kind of next partner to lead them on their next journey, right? Maybe they're founder led, family led, and they're looking for some sort of liquidity event that allows them to take some chips off the table, but continue to own a portion, continue to roll, and continue to grow the business. And, where I fit in is as the lead is developing that overall strategy, finding the opportunities. And once those opportunities present themselves, and the sellers, right, it's kind of takes two to tango, the seller is willing to have IMB as a partner, then we kind of do the execution phase of the investment and make that. And that could take 3 months, 6 months, whatever it takes to close a transaction. But it's all the way from the sourcing to the execution to the portfolio management and then the eventual exit is kind of my kind of breadth at IMB.
Got it. And we're going to spend a little bit of time kind of obviously double clicking into some of the elements you talked about, from the sourcing and how IMB is positioned to stand out from other folks just from an information and understanding what's happening in the landscape, and then making the case to a seller, hey, we're the right platform to partner with. We'll get to that in a second, but let's start with you're across this whole value chain. What opportunities right now would you say are most exciting in this space? And let's keep in mind that obviously, IMB Partners is pretty established, scaling up at the institutional level, even more so. A lot of our folks are kind of getting started in the game. So when you think about it, give us kind of what is exciting for maybe IMB Partners right now, but also if you were starting maybe with your first acquisition in the space, where would you be pointing for folks towards in terms of, interesting opportunities?
Yeah, it's so I would say, areas of interest, for us, we've always looked for companies that have strong moats, right? I think what you want to shy away from is and it could be an area to start, but if you're able to and have the ability to go acquire some of these businesses or enter the market, you kind of want to make your way up the food chain. And what I mean by that is there are different types of services, right? Especially in the world that I target, all the way from what they call kind of butts in the seat, right? Call center type work, which is kind of lower margin, lower skill set, all the way up to extremely high end capabilities, right? That service the intelligence community, from cybersecurity, offensive cybersecurity capabilities to penetration testing. There's a huge gamut of capabilities that contractors provide to federal agencies. And so some areas that are really interesting continue to be like IT modernization. A lot of federal agencies are still using systems like COBOL that are 50, 60-year-old legacy systems. Now, the government typically is 10 to 15 years behind the commercial sector in terms of implementing any type of new products, from Salesforce to ServiceNow to Workday. Commercial customers have been doing that for years, right? The government, just because of the nature of the beast, from how contracts are procured, how long it takes to win a contract, and then there's the legal element, right? You can protest. So even if you win a contract, the losers of that contract can protest and then drag it out in legal because they say, oh, the contracting officer didn't, there was a technicality, or they viewed my bid and proposal inaccurately. And that can be caught in the courts for years and years, right? And so that kind of legacy aspect can drag why implementation has been so slow, but the government is getting there. And so IT modernization, certain type of products, and it depends on what the size of the market is as well. So holistically, we like areas within IT modernization in terms of finding niches that you think could be blown out to multiple agencies. Looking for like AWS is a perfect example of this in the last 20 years, right? In terms of 10, 15 years ago, everybody was like, what's AWS in government? What's the cloud? Everything used to be on-prem, right? They used to have these big Cisco servers at each agency. And now they're like, every agency needs a cloud solution. And with that, can you enter with a cloud solution, which a lot of contractors did, and then bring in new solutions, right? So the government really appreciates what they call past performance, right? And if you implemented a solution of that contract well, then they're like, okay, well, ABC company, we gave you an A rating for your past performance. Why don't you bid on, we need this new service. We need a Salesforce product. Why don't you bid on it? And you're going to have a better shot at it because you have a relationship with us, you have past performance. And because of that relationship and past performance, in theory, you have a better shot at winning new work. So it's kind of that land and expand mentality. But again, that's like one area that we like. We continue to also like kind of legacy services that don't go away. I'll give an example. We have a business called Pro Food Solutions. They are the second largest protein provider. We're kind of a food distributor to the US military. Even with all this new AI that everyone's been talking about the last 2 years, right? All this new innovation with NVIDIA and Microsoft, all these folks. At the end of the day, we like to find businesses that are less disruptible to technology shifts, right? At the end of the day, the war fighter needs 3 meals a day, no matter if they're on a submarine in the ocean or if they're on a military base in the Middle East. We need our troops to be fed, and AI can't do that, right? You still got to be able to feed the troops from that standpoint. And these are big contracts. These are large contracts with the Defense Department, and they're not going away. And so there are multiple areas that we like that we think are defensible, have barriers to entry, but those are just kind of two examples, Brent.
No, that's really good. If I could, recap um, this idea of kind of the value chain, or kind of how high you up in the value chain is really interesting, because what I'm hearing is, maybe for somebody entering, finding someone who has that A rating is a great place to be. And this is kind of where IMB, is focused, where we're going to get somebody who's already, let's call it best in class at some specific niche that can be then expanded to other agencies. That may be something that someone who's doing their first acquisition could focus on, right? Maybe they can't start up the value chain doing SpaceX level, satellite deployment in space, but maybe they can do something, maybe at the call center level, what have you, but being able to expand other agencies. That's something that I think is accessible. And then on the second piece, which is things that just aren't going to change, no matter how much, disruption we're seeing in various industries such as food. It also, because we had a conversation where Taurus was mentioning, and you probably heard this analogy, the limp, right? Looking for businesses where a lot of folks will run away because they have surface level knowledge, but someone going in and might see, for example, customer concentration and say, I'm running away. They might say, actually, this is navigated correctly, a great opportunity, right? And even to expand within. And I think that's a big piece of that second part of the platform you mentioned, which is, kind of these services, right? They're not going away. And maybe there's a lot of customer concentration there, but the resilience and the opportunity to expand can still be interesting. So I think kind of boiling down kind of where these two things might apply, to someone who is really exploring this space. Which leads me to kind of the next question, which is, and you mentioned there's things from, litigation around, hey, actually, our proposal wasn't interpreted correctly. There's a whole language from RFP to the timelines and the certifications. This is going to be a very broad question, but I'll ask you to kind of structure it however you think is most useful for our audience. But give us kind of a sense of the, 80/20, the 20% that really drives 80% of the industry specific pieces that matter that someone who's looking to understand this game, federal contracting game, should understand. And it doesn't have to be, I'm going to give you the full course now. It could be, maybe go to these sites, these resources, but let me kind of just, paint a broad stroke for you, and then you can kind of do your homework after the session.
Yeah, no, no, definitely. I would say, government contracting, it's such a interesting arena to play in, right? And there's so many areas that you can decide to start in. I always say, like, a lot of folks, just like Apple or and some of these big companies, are like, oh, they're so big. I'm like, just like in government contracting, a lot of these companies started in their garage, right? And started with one person, two people. And government contracts is interesting because there is always opportunity, because the federal government, through small business or through the SBA, about 23% of all federal contracts, all federal spending yearly at the, you could say at the IT services or just services in general, are spent on what they call small businesses. And so there's could be hundreds of billions of dollars of awards every year that get funneled to startups, because the government wants to incubate and create and invest in potentially the next big thing, right? And so that in itself is already a great starting point and a great area to grow, because unlike kind of commercial markets where you have to go against the big boys right away, you're kind of starting in this protected area. And from there are two paths that I think a lot of folks can go down, which is, I want to start a business and I want to be what's known as a subcontractor, right? Where I just want to start to do work. I have a particular skill set. Maybe I have a couple of friends who want to start this business, but we don't want to go down the prime route. And I can talk about the prime route later. But let's just say you have a couple of friends and you're like, I'm really good at IT modernization. Or we're experts at AWS or Azure implementation. Okay, well, you can create a company and then you can reach out to, the big primes, right? Leidos, Kaki, Booz Allen, some of these really big ones, and say, I'm a small business, but I don't want to do the prime work. I want to just do sub work. And then they'll have you in their system. And when those guys win a big contract, they can sub the work out to you. So that's one route. A lot of companies go down that route, become a subcontractor. It's a good business, but it's not going to be a high multiple business, right? Because you don't really control your destiny. Now, the other part of a contracting you can go down to, which is the prime route, right? This is where, just like when you build a house, you have a GC and then they sell it out to electricians and all this. The prime is the GC, right? They get to control the destiny of their business. And what they do is, you maybe you form a company, and the government puts out these contracts and you can prime them, right? You bid on them, you're able to win those contracts, and you prime the opportunity, meaning you're the lead. You're one of the, you got on that contract, you're going to perform the work, and you can have subcontractors with you to help perform the work, but the responsibility is on you to execute what the government needs to be done. Right. And what's nice about that is you start to build a track record, right? Those past qualifications, you get all of that benefit that allows you to then step function in terms of growth, right? In terms of, you won this contract, and then you kind of build from there and scale up. And the nice part too is the visibility. Most of these prime contracts could be 3, 5, 10 years in length. And so that's another aspect that why a lot of folks, especially in the investing world, like government contracting, is the visibility you have typically is much higher than say a commercial business, right? Where you're battling for customers every day, every month, every year. You have to renew customers on that cadence. Whereas on the government contract, you win a contract with, let's just say the IRS from modernization. It's a 7-year contract with potentially 3 years of option years. So you have a decade worth of visibility, which I've never heard of a commercial customer giving anybody 10 years worth of visibility. Right. So I'll pause there, but that's kind of
This is
I
good
would
stuff.
segment it.
Yeah, no, this is really good stuff. I think the way you broke down just at the highest level, the different angles to play. I think when you tie that into also the value chain conversation, well, let me ask you this. Is it fair to say that a proxy of going farther up the value chain is margin as well? Meaning, what's the relationship between margins in a business and where you are in a value chain? Just help us understand, and obviously even better, what might be the sweet spot for someone to get into the game but not necessarily be in such a low margin business that, ultimately the juice may not be worth the squeeze. Like, how do you kind of overlay the margin thinking alongside how you would approach where to enter?
Yeah. So it really, and so I always view it as it's like a mosaic, right? Because there are prime contracts that you're doing really low end work and you're gonna have lower margin. And there could be subcontractor work that you're doing high end work, high margin, but you don't control your destiny, right? And so there's gonna be a lot of parts. Two, I would say yes, there's semi correlation to if you're the prime, you can control your margin, you can control your margin profile better than if you were a subcontractor, right? Because as a subcontractor, you're just taking the terms that the prime tells you you're going to take. The prime's going to say, I'm going to pay you this, and that's it. Whereas the prime, because they bid the work, they responded to the RFP and they knew what the margins were entering the contract, they can kind of massage their financial profile in a sense. So yes, I would say it's definitely correlated, but it's not 100%. But I would say the biggest driver of margin within government services, and I think a lot of companies, not just GovCon, is going to be what do you bring to the table, right? If you are bringing something that is unique and differentiated and is in demand where there aren't a lot of people doing it, then we can kind of get into the different contract types. But in general, if you're doing high end capabilities, you're going to get higher margin. I would say the margin profiles typically are from there's not going to be astronomical. Nobody's going to have like 50% EBITDA margins like Facebook, but you're going to go from you know probably 5 to 6% EBITDA margins on the lower end work to maybe mid teens for the highest end of work. So that's probably the range I've seen in my career for the different types of work, but doesn't really push higher than that too.
Got it. And we'll go next into the government contract bidding process and
Mhm.
RFPs. I think you probably do a whole talk just on that piece. But before that, how would you have folks think about when they're kind of coming into the game? There's the PE model where you're exiting, right? So you're looking at multiples, and if there's any interesting ways we should be thinking about multiples in the government contracting world, that would be useful. But also holding, right? So someone who's looking to build generational wealth and the idea of having something that you can grow, pass down, control, two different models. How would you, kind of have folks at least think through the considerations when it comes to if you're exiting and you're thinking about multiples and how do you get multiple expansion? On the other end, the benefits of security or maybe even the false sense of security that you can build a business that you can continue to grow, pass down, own, and get a decent margin, right? As you try to create generational situations.
Yeah, no, absolutely. It's the way that we think about it and contracting is interesting because to try to generate long-term wealth, right, creation, and let's just say even on the private equity side, I know we have to exit, but kind of that same mindset, like how do you build a sustainable, growing, cash flowing business? There is a fork in the road because a lot of folks start in kind of the small business world, and then there is a cap, right, in the small business world. So the government wants to incubate you, but they don't want to incubate you forever. And so you have to then take the leap of faith and then jump into the bigger pond. You have to compete against the big boys eventually. Now, if you're able to cross that bridge and compete against the larger players, then that's where you can really start to build longer term, sustainable, generational wealth, as you mentioned, Brandon. What you can do in the meantime is really buy businesses that have, to your point, the limp, right? I'll give you an example. Just in December, the SBA put out some new rules around what type of companies, if they get acquired, there's a bunch of legal aspects to this, but essentially larger businesses can't buy smaller businesses like they have done in the past. And so that's going to shrink the pool of buyers for some really interesting businesses that were hoping to exit as their monetization event. Maybe they weren't thinking about long term, but this really adds an opportunity for a lot of maybe folks on the phone here to go look for some of these businesses that already have been built. Maybe there's some you know, older stage individual who is looking at for an exit, but their valuation is now much lower because the big buyers can't buy them. It gives an opportunity for, IMBs of the world and others to step in their shoes and say, okay, I understand what they're doing. I want to learn the business, and maybe I can't sell to a large business now, but I have the foundation to now learn it, grow it, cross the bridge into the full and open world, and then start from there. Because the hardest part even is just that starting aspect of winning contracts. And if you can find some of these small businesses that already won the contract and they're looking for transitional, the generational transition, this is a great opportunity to get into there, because the SBA has, last month basically changed the rules, and it's better now to get into those type of businesses, because those businesses historically would try to sell to bigger strategic buyers, but that kind of exit ramp has been cut off by the government.
Well, what was the impetus for that ruling?
So it was a couple pieces. The SBA, it was a loophole that was exposed by the large strategics probably 20, 30 years ago. Historically, the SBA wants 23% of their work, or 23% of government work should be done by small businesses. What has happened is that number is actually materially lower. You're probably talking in the teens every year, because in the past, M&A would occur, and the loophole was these contracts, those small businesses that they got acquired, maybe like, let's just say, I'll use an example. A Deloitte buys one of these small businesses for the capability that they had at a certain agency that Deloitte didn't have. So they want to add it to their portfolio. The loophole is that if it was a small business prior to acquisition, then the government or Deloitte could use the existing contract, even though it was a small business contract, and new work on it until that contract expired. So let's just say that contract had 5 years on it. That means Deloitte could bid on that contract, even though they were a large business. They could continue to bid on that contract, even though they were a large. And so the government was like, wait, we wanted that work to be done by a small business, and now it's being done by Deloitte, which is a large company. What the government has now done is they shut that loophole off. If you buy a small business, you must recertify immediately, and you are no longer entitled to bid on that contract. And so that has left a lot of companies that have good capabilities, good performance, with no exit opportunity, or limited, I would say no, limited exit opportunities, because the strategics now can't value you. They can't put a number on your business because there's no cash flows coming from that business anymore. And so that leaves a good opportunity for aspiring entrepreneurs, people who want to enter through M&A, to go look for those type of businesses that have that limp that you mentioned, Brandon, right? This is a new limp in the GovCon world, where if you're 50, 60, 70 years old, you built this business, your expectation was, oh, I'm going to sell to XYZ company in a couple of years. The government's like, sorry, you made a lot of money through small business, and we expect it to stay in small business. But that doesn't, what the value creation in theory playbook could be for folks now is you buy one of these businesses, you utilize the cash flows that are coming out from a small business, but then use the past performance and go bid and go try your hand at full and open work, right? That will help to transition the business over time that the existing founder maybe doesn't have the time or want to do. And so that could leave a lot of good openings. And that rule, they gave a 1-year grace period. So the rule doesn't in theory kick in until January of 2026. However, it's put this rule change, and we all know on the phone, right? M&A can take many, many months, many quarters to get done. So it's left a lot of founders and family-owned businesses in a bind, right? They're trying to decide, like, do we double down? Do we look to invest and try to grow naturally into the full and open world? Or do we just call it quits and say, hey, we did really well financially. Maybe it's time to put the business on the market. So there's a lot of discussions like that happening. And with that type of change, it leaves an opening for folks like us on the phone here.
That's super interesting. And what I love about that is one, it's very timely, it's very relevant to the folks that are on the call. It's also a convergence of a lot of the different considerations we talked about before, which is where do you get in, this concept of a limp. Also that, the government is ultimately looking to do the right thing in this case. So basically the folks that are kind of getting hit, you can make the argument they're getting hit because they thought they're going to have some multiple right coming out that they probably aren't looking at now, but they're saying, hey, look, we got you to this position where you had a really good business for a long time, right? And we want to make sure other people have that same opportunity that you had, which you can make the argument is the right incentives. But I also want to kind of ground the conversation in um, what are we defining as small in one of the Taurus's golden rules, he'll say, and again, we're working with in contact with people who have a lot of different views on this, right? So some folks are like, I'm only doing SBA loans, things I can take down myself, right? Taurus will say basically nothing moves unless you have 2 million, EBITDA minimum, because otherwise you're buying a job. He'll say you need the 20% seller kick in to make the deal work from a bank debt perspective, right? And he's very clear in terms of what he's looking at. But we see other people who say, hey, maybe I can't bite off the equity portion. And I think people have to kind of decide what works best for them. But when you talk about what is small business defined as? What is the upper threshold of that from a government perspective, and any other delineations you think make sense for people to kind of understand as they are in the early stages of where to focus?
Sure, sure. So, when you go to the SBA website, they basically break out, there are thousands of NAICS codes, right, across multiple industries. And so the government basically has said, okay, here are all the NAICS codes, from could be poultry farming all the way down to high-end IT. Every industry has a NAICS code, and the government puts kind of a threshold. So there are two types of thresholds, the two main thresholds that government defines small business. In IT services type industries, NAICS codes, it's typically call it about a $34 million threshold. So if your 5-year revenue average is below 34 million, you are considered a small business. If you're over $34 million 5-year average revenue, then you what they call naturally graduated. That means you have to bid full and open contracts after that. Then there are some businesses, like our food business, that the NAICS code is food manufacturing. And so there's it's not revenue based, it's employee based. So it's like, I think ours is at 1,000 employees. So if you have under 1,000 employees, you're considered a small business. If you're over 1,000 employees, you're a big business, right? So for us, like we have under 1,000, so we can designate ourselves a small business. Like a Tyson Foods with 50,000 employees, they're a large business, right? And so it depends on where you fall in that NAICS code. But let's just say, just for argument's sake, like you're in that IT services, it's at about 34 million. And so there's a lot of good companies that are under 34 million of revenue, right? You can have companies that do $500,000 of EBITDA all the way up to potentially $6 or $7 million of EBITDA, right? That have revenue under $34 million. So there's a lot of scope there to go hunting, especially in the small business world.
No, that's super helpful. So let's assume, and a lot of folks that we're talking about, on this call and will be watching this video, they're probably looking at a self-funded search, right? They've established themselves professionally. They have, enough to kind of cover their search expenses. They probably will need to raise equity from friends, family, what have you. And they're like, hey, look, we want to focus on this government contracting space. I have 6 months to kind of figure this thing out. So here's what we know thus far based on what we talked about. One, understanding, again, where the opportunities are. And you mentioned there's a wave of businesses that are small businesses under that $34 million level, might be interesting to look at, right? Then from within there, you're looking at, okay, one or two things: services businesses that have moats and will not change or be disrupted. And then call it, I guess, product-based businesses that potentially are higher value, over time. But let's just say, for example, someone's looking at, you mentioned this range. It could be a business with up to 34 million with a super low EBITDA, and then one with a higher EBITDA. They want to obviously look at the higher EBITDA. If you were starting right now and you have 6 months to kind of dive in and include places you would go, where you would go to kind of meet potential folks, where you would study what NAICS code, like how would you spend that 6 month period to really ensure that you were focused on efficiently thinking through what's the best opportunity and what to know in the space to be successful once you buy the business.
Yeah, no, absolutely. This is the space, especially in this part of the market, right? And I would say any part of the government contracting market, we kind of mapped it out, right? So call it 90+% of all traditional federal contractors have an office or are based in the DMV, right? Just given that DC is the mecca of federal agencies, this is where all the contracting officers are. So it just makes sense that you would have, if your customers are all in one place, all the contractors would be in one place, right? And so I think there's dozens and dozens of events that happen monthly, that happen quarterly, where the SBA also has conferences and events to invite people who are looking to learn more, invite contractors to these events, especially in the federal contracting world, to because I think the contracting world has been the SBA's kind of best showcase of what they've been able to do to grow small business, not just in generally, but federal contracting is such a unique angle. Sometimes they tout growing consumer businesses or healthcare companies or industrial companies, but the federal contracting landscape has really shown that SBA works effectively in this part of the market. And so they have a lot of conferences that you can attend. And if you're searching, the way that I like to go about it sometimes is you can basically kind of do a search for small business vehicles. When I say like there are these big contracts that sometimes hundreds of contractors win, and you can find these contracts. They're all publicly available, and they have to list out all the primes contractors that want a seat on these contracts, and they're small, right? Because they won a small business contract. And then it's kind of digging in, and I know it takes a little time, but finding companies that will have discussions who you reach out to or LinkedIn them, and it's a slow slog, but they're out there. All the names of the companies are out there, and sometimes with their contact information. And that's how you would kind of do it, right? Kind of one at a time, reach out to them. But I'd say conferences, events where you get to meet as many folks as possible. And it's all going to be predominantly here in the DC area. And it makes it a little bit easier to go hunting, right? So if you are able to do like a networking trip, get 10 companies on your list, come out to DC, put the, coffee chats, lunches, whatever it is, and then attend some conferences and events, I think it's worthwhile to kind of build your network that way and look for acquisition opportunities that way.
Another piece of advice that Taurus recommended was, instead of going broad, really go in deep and focus on a specific niche. What would be your perspective on that? And what would be, in your opinion, the impact of really honing in a niche? So maybe just kind of walk us through, is that true? If so, how does one kind of think through what that niche is with the resources that you mentioned? And then how do you focus on accelerating, your journey to buy a business based on being really locked into that niche?
Yeah, I think it's I think especially, how I think about it is I think you should be locked in. And I think go back to what I said, right? Once you find one of these contracts, right? These contracts are bid specifically for a certain type of work, right? Like it's not like a generalist contract. A lot of these contracts are very specific type of work that they want to do, right? So there could be, some of these big contracts are like, hey, these are IT specific contracts, or these are product specific contracts. So once you identify a contract that you think has the unique capabilities that you're looking for, you can start to find something that is actionable. Because what I do agree with Taurus is, hey, you want to have a niche, but what you don't want to do is be so specific on your first deal that you're not going to find something, right? You want to at least, and it goes back to the land and expand, right? You want to find a platform or a company that you think has good bones, good DNA, good capabilities. It might not be perfect, but it might have 6 out of 10, 5 out of 10 of what you're looking for, good valuation, get in the door, and then from there, build off of that, right? And then say, okay, I was looking for this part. Okay, let's go do another tuck-in acquisition to fill in that hole. And that not only works at the lower level, what we're talking about here, folks who are looking to get into the market, but works in, our part of the market, and even at the upper end of the market. You're going to buy companies and you're saying, okay, I'm missing this part. Okay, we have to buy it through an add-on. And so that I would say you want to be targeted, and you want to know that you don't want to do, low-end services, but anything in that, wherever you identify, you want to find something that is number one actionable, because again, it goes back to, you need two to tango, and you don't want to be so tight on your qualifications that if you're going out there dating, you're not finding anybody, right? And so I would just say that that's what I would kind of think through that. But I want to say go too broad, but broad enough where you're getting some nibbles on the line.
And the two to tango piece, I think, is really apt because I think what Taurus was kind of saying was, hey, look, if you say, hey, I'm looking to focus on this type of business, it's much easier to be known in that space as someone who is focused, right? And so then, business brokers can help you. You can go to specific industry trade shows and then they can make introductions to other people. And it's just very easy for people to understand who you are, what you're looking to get done. And then ultimately your story is very believable to the seller. And to your point around two to tango, if you were to kind of step back and give folks advice around the most attractive pitch to a seller in this space, obviously one of them is just, hey, I'm focused on this space. I'm looking at companies in this space. I've done work. I understand this space. But what's some of the advice you would give folks who are now kind of looking to really have conversations and stand out from the crowd and be compelling in terms of the case they're making to a seller that ultimately will sell them the business?
Yeah, I think it's a couple things. I think one is trying to empathize with where the seller's coming from because this could be essentially their baby, right? They built this from scratch. I think being able to articulate a vision where you're taking care of their people, right? Because at the end of the day, especially in government contracting, most of these businesses are people based, like a lot of industries, but especially a founder, these people are the ones who helped to grow the business. They were kind of family or friends to the founder. And so what I've always seen that has worked for me and to build longer term relationships and the answer might be no now, but being able to say that you understand upfront can lead to a better outcome in the future. They might say, okay, now is the right time, and because you made it a really good, strong impression on that founder because you understood, hey, I want to take care of your people. We're people in partnership first. We're not going to do anything to your people. We're going to continue to grow it. We want to promote people. I think that's number one. You want to get them comfortable with who you are as a person, especially in this space, because government contracting in general, you're dealing with a lot of folks who, just because of the nature of how you win contracts, they're open, but they're also tight-lipped because they don't want to, if there's any trade secrets or how they bid. And so the number one thing is building that trust factor with the founder is crucial. And then from there, once you are able to gain that trust and they open their books a little bit or tell you a little bit more of the business, I think it's how do you add value for them, right? Not just from a monetary standpoint, but what do you bring to the table? Is it incremental relation? Let's just say the founder wants to stay on and help you run the business. Well, what do you bring to the table outside of capital? What are the relationships you have, right? Let's just say I have, this company A is really strong at IRS. And then you could say, oh, well, I have a really strong relationships with former folks who are close at Department of Justice, right? And, your capabilities fit really right there. What I think I could introduce you to a lot of folks there who could use the type of work you're doing at Treasury and IRS. Maybe we can pivot it there. And, that's one thing. And then the other aspect is kind of the M&A piece, right? Okay. How do we identify? Because a lot of founders, and I think even if you're trying to get into this space at the low end, you always have to think about potential M&A because you want to plug any of the holes you have in your portfolio. And it doesn't have to be big, right? You could buy a business that has $1 million of revenue, $2 million of revenue, but that gives you a capability that you didn't have. And so I think those are kind of the different pieces, Brandon, that I think I would think through initially is number one, building that trust, empathize with who you're speaking to. What are their needs versus your needs first is critical.
That's really good stuff. And I particularly like the element of selling them on the future of the business, because I think a lot of folks don't view me letting you know how I'm going to grow the business as being an important part of it. It's almost as if being able to raise the funding and kind of allow that seller to kind of get some liquidity from the transaction is the end all be all. But you're saying, hey, look, we're going to expand, right? We're going to fill in these gaps. We're going to do a land and expand strategy. We're going to, and kind of selling them on where you're going and what your vision is. Can really resonate, it sounds like, with the seller. Let's focus on the RFP, the government contracting bidding process. Obviously, that's kind of where the buck stops. Where does that intersect with folks who are subcontractors versus prime? So is that a thing? And then obviously with prime, it's clearly a thing. But somebody who's an expert in the space, if you had to boil down to 80-20, what's the 20% that really matters when it comes to government contract? He talked about ratings and other things. What do folks need to know that are kind of starting off?
Yeah, it's so when you decide to make the plunge into so I'll take a step back. So in subcontracting, the paperwork is more limited, right? And the responsibility is more limited. Your responsibility is just to do a good job for your prime.
Are you bidding for that? How does
So,
that
so in theory, what happens is you join a team. Let's just say Booz Allen is bidding on a big contract. They need to show the government they have a big team of different capabilities. So let's just say you're really good at AWS. They'll just say, okay, Brandon's company, you're good at AWS. Why don't you be a sub to me? You're going to be, we're going to sign an agreement that says you're a sub to Booz on this contract, and you're providing me AWS services. And you'll just do like a one pager of like, what does Brandon's company actually do? You give that to Booz. Booz will then incorporate that language into their proposal. That's high level. That's about it, right? And you pray that Booz wins, right? And that's the game of subcontracting. You just are trying to find as many partners to team with on contracts that they're bidding on, that you hope enough of them win that you get some subcontract work, right? So there is some element, but it's not a lot, right? You're just kind of doing very limited paperwork to tell the prime, through the prime to the government, what your capabilities are. Now, on the prime side, this is where it gets, and by the way, and as a subcontractor, you're not exclusive, right? And so let's just say there are 10 primes bidding on the same contract. You can kind of hedge yourself, right? You can kind of say, okay, I'm going to partner with 5 out of the 10, right? So your probability of winning goes up. But again, you don't control your destiny. They just give you don't have any work share promises. You're just like, I can do this work. And if the work comes through, the prime can decide. The prime sometimes, majority of the time, will say, you know what, I will actually do the work in-house and kind of give you some crumbs, right? By the way, they're big enough crumbs that you can make some pretty big businesses out of them, right? There are some really big companies that are subcontractors only, and they've made a very, very good, healthy business out of it. Now, on the prime side, you take a lot more risk, you get a lot more reward, right? Because it's just like an example, there could be 10 companies bidding on that contract, maybe only 2 win, 3 win. They'll tell you, the contracting officer is like, we are going to target 2 winners. So you only have like a 20% chance, and you have to do all the work, right? So you have to go through the RFQ process, then the RFP process. And it is a multi-year stage to win an award. So what I mean by that is the government typically will ask for feedback, right? And so let's just say the RFQ, the government's looking for, I'll use an example. They're looking for a modernization effort to roll out COBOL. Right? They want to put in some new system in. The government will say, okay, this award's probably going to happen in 2.5 years. Let's put on an RFQ now. Let's get some question going from the industry. Let's answer them. What kind of program are you looking to implement? What software? Blah blah blah. Say that's a 6 to 8 month process. Okay. They'll take all that feedback, they'll put out an RFP. And in that process, you as a prime are trying to shape it, right? You're trying to say, okay, ABC company, we bring this, and this. And we want the contracting officer to shape the language in a certain way that gives us a better opportunity of winning, right? We want to box out our competitors at the proposal stage. Harder because 9 other people are doing the same thing, right? They're all pushing and prodding who has the best relationship with this agency, blah, blah, blah. So fine, the RFP comes out, you get about 6 months to respond. Let's just say you get 6 months to respond. These proposals are thick, right? Like volumes of paperwork, right? Could be hundreds of pages of documents, not just like Word documents, could be presentation. And this is where you can see now where a lot of why subcontracting sometimes is attractive, because the primes have to manage it, capture it, proposal it. And at the proposal stage, as I mentioned, you have a whole team writing paragraphs of description of how are you addressing this section of the RFP, past performance, right? Putting graphics. So you have to have a graphics team, proposal writers, a growth officer, a BD folk. So you have a big, big team. So it's large upfront investment just to build the proposal and submit it, and you don't even know if you've won it, right? And so you have to do that over and over and over, right? This isn't just a one contract deal. You build up what they call a pipeline of many contracts that you're going to submit on all 10 of these contracts, each with their own team, each with hundreds of pages of documents to create and presentations with the hope that you win 20% of them, right? And by the way, you also have the BD people have to reach out to. There are going to be some capabilities that we don't have in our company. This is where you reach out to the subcontractors. You're like, hey, I don't have AWS experience. Will you sub with me? Oh, I don't have Azure experience. I don't have Salesforce experience. Can you partner with me as a subcontractor? And then the prime has to aggregate all of those folks into the proposal as well as managing those teaming partners, right? You're like, okay, hey, don't, sometimes you have to say, okay, if you have a capability that's really in vogue, I'll promise you 5% of the work on the contract if you're exclusive to me. So somebody at the prime has to manage that relationship so they don't go somewhere else. And you're competing against, again, as I said, 9 other primes, right? And so all of that culminates into you submit the proposal, and before the proposal, you have to, it goes through what they call color review. You have another team that reads all the hundreds of pages that you put together, because the government, when they vet it, they can actually kick you out of the process for technicalities, right? They'll say, oh, you didn't actually, I said to put in what kind of accounting system do you have? And you left it blank. Well, you're booted. You're not available for the award. So you have a team exclusively making sure that you've addressed every piece of ask in the proposal down to the last question. And again, that takes upfront investment. And then from there, once you win it, and let's just say you win it, as I mentioned earlier, you win this, and then the losers can protest, right? And then so if the 2 people won, you were one of those 2. The 8 other losers can protest, and those protests can drag on for 6 months, a year, 2 years. I mean, I've seen protests that last 10 years, right? And so those type of things occur. But in theory, if you want a seat, then you control your destiny, right? As I said, you control your destiny. Then you want to see on the license is, let's just say, a multi-billion-dollar contract, or even a small contract, could be $100 million contract. And there's 2 people. Wow. Well, that's a 5-year contract, right? It's $20 million of revenue per year, right? The question will be, is that worth it to you, right? All that work up front to say, and by the way, let's just say you get $20 million of revenue and you share with someone else. That's $10 million of revenue a year. Yeah, you have to give 2 to 3 to your subcontractors, but you as the prime get 7 of it, and you can manage the costs effectively. And that's, just like any other business, that's your profit, but you control the destiny as a prime. And then as you do work, you build the experience and you build the past qualifications, right? So as I mentioned, the government gives you a rating essentially every year. Like, how well do you do that work? And that rating is transferable for new bids, right? So when you go do more, so it's like kind of success begets success. The more you do well, the more prime work you win, you can then take that rating and show to another contractor, to a new contractor, and say, look, I did this similar work. I got A rating, and that contract officer will give you more weight because they're like, oh, wow, ABC company, you did really good work here. It should translate to good work on my contract. So it builds on itself. It's like momentum, which as a subcontractor, you don't get that, right? You're not going to get, you're just going to be a sub. You're just kind of tagging onto as many teams with the hope that it's hopefully higher percentage of guarantee of work, but it's not going to be work that you're dictating. It's work that's just kind of given to you by the prime. So I hope that is.
Well, I mean, that was,
That's
first of all, yikes, right? I mean, to kind of get insight into how complex this process is as far as players and process and the litigation part of it. I mean, I guess if there's any takeaway, it's this stuff is complex and it takes a really long time. But the rewards, if you can execute, are meaningful. Visibility, big numbers, etc. We're out of time, but man, we got to do a part 2 because we can talk about you talked about agency relationships and how does that work, right? There's a lot of disruptive forces, or at least folks think there may be disruptive forces in the industry, and how much does that potentially influence how you would advise folks to add value, or maybe ignore the hype. So but with that, we'll have to kind of pause it for now. You gave us a lot to really chew on. We have a relationship with IMB, and we're going to partner with folks, on a one-on-one basis, depending on where they are in their process. But first, I just want to say, Norman, thank you, man. You gave a lot of really interesting stuff, from real opportunities that people can focus on now, but also some things in terms of just long-term thinking and how to position yourself based on what may work best for you. So I think this is a really, really good talk that'll be valuable for the network. So I just want to say thank you. I appreciate the time. we'll talk about doing a follow-up where we can kind of maybe unpack some other elements of it. But in the meantime, just want to say thanks again. We'll definitely be in touch soon. Appreciate it. And all the best as you for 2025.
Thank you very much, Brandon. It's great to be with everyone. And if there's any questions, always happy to do follow-ups and look forward to the next discussion.
Appreciate it, Norman. We'll be in touch.
Thank you.